Welcome, everyone, to the Great Depression, Causes and Roots. The first half today, guys, will just be on three main causes, and our next screencast will be on the underlying roots, or kind of like bigger problems. And speaking of problems, let's just think about a caption we could provide for this migrant mother. What could possibly be worrying her? This is in the 1930s on the Great Plains. So let's get into your guided notes. You guys are welcome to follow along with my outline or just do your own. But if you guys check out, number one says the long bull market, and I will talk about what that means. It starts, though, with optimism. Okay, so under A is the election of 1928. And I want you guys to note that pictured there is Herbert Hoover. He's a Republican. He wins overwhelmingly in this election. You guys should know that for this election, it gave the country kind of a false sense of security. He really won with an overwhelming majority vote over Democrat Al Smith. Interesting side note, guys, is Al Smith was also Catholic. And you guys should know from your 1920s that a Catholic president was not ever going to be a reality, not until JFK in the 1960s. All right, guys, so I don't want to keep rambling, but I want you guys for the election of 1928 to know that it was an overwhelming defeat. It gave the country this false sense of security, extreme optimism, and you guys should pay attention to our election in 2020 because you'll hear the Republican Party taking credit, right, for our strong economy, and that's exactly what Hoover does here in 1928. So history does repeat itself. All right, guys, so let's move on to B, the stock market. And that's where the bull comes in. Here he is. So what is a bull market? I want you guys to put down that it's when a stock market price like dramatically increases, shoots way up. And then when people hear about that, guys, it leads to more investing. So that's what a bull market is. It's a really, really aggressively strong stock market. And then, guys, the next thing I want you to know, though, is margin. Okay, so to define margin, it's where if you want to buy stock, right, because everyone else is and they're making money, you put down a small down payment, like 10%. Then, guys, you owe the rest, right, the 90%, as a loan. The next thing, guys, is margin call. A margin call is, you guys don't want to get a margin call. So basically, it would be a broker who sold you the stock, right, calling you and asking to get asking you to repay your loan. So, guys, a margin call would happen because investors would be sensitive to dips in the prices, and so they would want to sell quickly. But if they called you, right, you wouldn't be able to pay back your whole loan, right? Remember, you only put down 10%. Where's that 90% going to come from? All right, so let's move on. So, guys, for C and D, I want you to pay attention here. So for C, note that the price, guys, for stocks did reflect the true value, or what we call face value. And guys, that indicates how strong a company's profits were. So, for example, a higher price correlate with your profits. So it would be expensive if you buy stock today of a really strong company, but the chances are is that you'd be able to grow that money. All right, but please check out here for letter D. By late 20s, you guys, investors, these brokers, they bid up prices. It's artificial inflation, what we also call speculation, right? It's risk taking. And why they did that is to sell more stock, right? And that way they could make more money. So that is kind of the nature of the beast there. And check out my graph down below, because whenever there is a bull market, people get nervous that the bottom is going to drop out. So check out 2009 to 2016. All right, guys, let's keep going. So under number 2 on my outline, guys, the Great Crash. I want you guys to follow along with me here under A. The market, you guys, by September of 29, begins to run out of customers. Brokers were getting nervous, right? Because the prices were dropping and they wanted to sell in order to pay the interest on their loans. So prices, guys, fall more and margin calls, right? Remember those calls you don't want to get? Those also increase because people want to secure their money. Guys, under B, I want you to know what Black Thursday is. It's really just the first kind of major drop in prices that causes panic and margin calls. And guys, C, October 29th, called Black Tuesday, is up to that point, guys, the steepest dive in prices. So, the most losses. And you guys should know by mid-November, 16 million shares are sold because people are jumpy, right? And the market loses up to $15 billion in value. So, the economy is really tanking. Oh, check out here this picture, guys. Panic and chaos, right? Look at all the crowds here. The crowds are assembling outside the New York Stock Exchange. They're worried about where their money is going. So let's move on. Okay, guys, so I want you to, now we're on to 3, banks begin to close. So I want you guys to know that the banks had loaned 16 million shares. Let me just pause this. Hold on, guys. Sorry. Glitch, but I'm back. So guys, so the end of number 2, guys, by mid-November, I had just shown you this slide that I want you to know that 15 billion had been lost. But then, guys, I'm on to number 3, which is talking about how prices are just dropping, even by a third, and $30 billion are lost, which really totals all the wages earned, for the entire year. And before we move on, guys, here are some of the newspapers at the time to show you about all of the losses and panic and market bottom, right? Rock bottom. You don't want to hit that. But I want you guys to just, ask yourself this question. Ask your parents what red versus in the black means, and which one are you? So you guys should know that red was the color of ink that accountants would use in the books to show that you were in debt. And you guys know when you shop on a black day, such as Black Friday, black is what companies want. They want you to buy so they can make profits. So here, guys, black is good, and red means that you're in the hole, you're in debt. There's a fun fact. All right, guys, I am rambling, but I'm going to get right back on. So let's go to, 3 officially, guys, the bank's getting to close. All right, now I know what I'm doing. So, guys, you should know the first thing of letter A, that banks had loaned a lot of money, like $6 million, to stock speculators. For B, guys, banks then invested that money. They deposited the money into stocks, hoping for higher returns. So, guys, C, stock values would collapse, and that would then lead to banks losing their money on their investments. And speculators, guys, would default on their loans. You guys should know that if you default, it means they can't pay your loan back. Okay? And just a question for you is, what happens right here to your money when banks close? Well, your money back then, guys, was not protected, so you lose it. Okay, guys, this slide has a picture of bank runs, and I have here the title that bank runs lead to financial ruin. So what is a bank run? It's defined right down here. It's when people, right, they're so nervous because of the fluctuations and margin calls. They go right here and they withdraw all of their money, all at the same time, and the bank is forced to collapse. So that's for F. And you guys should know that in 1932, G, guys, 10% of banks had closed. And some of you guys may know this, but let me just make this a little bigger so that I can finish. All right, so almost done. So how do banks make their money? So I do want to all take economics, but here's just a little picture to highlight that banks make money with interest. Okay, so they invest your money and they charge interest on your loans. So this diagram, guys, just stay with me. Look at the money that goes in, right? Interest rates. A little bit of money has to go out, right? Because of the deposits. But the bank, guys, keeps 3 times the difference, right? So they really profit from your money. They use your money to make more money. All right, guys, I am going to close right now. The second half, meaning the bigger problems, the roots, we'll get to for our next homework. So this is Miss Tev signing off. I hope you guys have a good rest of your evening.